Hello, everybody. It's Victor here again from Trend Following Trading for Beginners, and here is this week's weekly update on my sample trading portfolio. Coming up next. Okay, this week's a bit delayed of my podcast, been very busy, and this basically just goes to show that every day when I do my review and prepare for the next day for trading, sometimes life happens and I have to delay until well into the morning, in the midnight when my children are asleep. Then I can do something. So for the past week, the share trading has been quite quiet in most cases. The sample portfolio, not much happened apart from a couple of things. I think the crude oils, the Brent crude and the US crude, the long-term 50 days over 200 days moving average system has moved from sell into neutral because these two basically have moved up quite a little bit and broken the 50 days line. And so the system basically said it's now neutral. What neutral means is when the price is between 50 days and 200 days moving average, that means it's a standard sign mode. As neutral, you don't do anything with it. The reason why I don't do anything with it is because basically I believe this is where the zone where the bulls and the bears fight each other out. There's no clear winner here. Short term, there's still both crude oil, Brent crude and US crude are still a sell based on the 2 ATR system, but over long term, that's basically indeterminate. So stay neutral. Same as the Turtle system 2 system. Well, last week is neutral, so stay neutral at the moment. The major change this week basically is the FTSE, the UK index, basically FTSE 100. Last week is more like sell, and this week is in the short term and long term is in buying zone. The Turtle system 2 system is still neutral, but the price has moved up basically above the 50 days, 200 day moving average, and also broken the 280 line a couple of days before that. So it's basically that one is following the rest of the market, or all the index is staying above the 50 days and 200 day moving average. So that's the main thing. And Nasdaq as well moved on the system 2. The Turtle system 2 system has moved from neutral last week into buying. So across the board, short term, medium term, and long term is all a buy. So remember, the 2 ATR system is short term. The Turtle S2 system, system 2 is a medium term system as far as I'm concerned. And then 50 days over 200 days moving average is the long-term systems. So across the board, excuse me, is Nasdaq is basically moved up pretty well as well. But what I've observed this week so far is it looks like very similar to the Hang Seng index, the Asian Hong Kong index. Somehow I think I mentioned last week as well that all the index seems to have gone through like a side trend thing, side trending channel, so to speak. It's not moving up much, it's not moving up down much, and stay with more or less a channel. And Nasdaq, for some reason, is making a new high, so which is relatively good. But where does it go? Where will it go? Because personally, I don't believe there's any fundamental to let it move up. But the market is a market. Is like Warren Buffett said, short term the market is a voting machine, long term is a weighing machine. So at the moment, people basically generally vote. Nasdaq is is making hay, so it's moving up. So people like technology in US, and that also reflects pretty well on the quarterly result. A couple of results comes out during the past week, and what's most amazing, I think, is I think it's two things. One is gaps. We have Twitter's basically gap down. So is eBay. And when the result came out, PayPal beat the consensus, beat what the market expected, and basically jumped straight up. And Tesla, which is quite interesting, everybody think they won't make its numbers, but it surprised the market, and there's definitely a short squeeze in there, and the price has gone up big time, above the $300, and continue to do so for a couple of days. And the other thing, amazing thing is Amazon. It missed its earnings, first time in the last 2 years, and then after aftermarket trading on, I think Thursday, the result came out, it dropped down like $118. But when the price basically start trading the next day on Friday, it only lost about like $16. It's quite amazing that you see a lot. There's basically a very strong bottom or base with Amazon, and every time we go down, some $118 in one job is quite ridiculous. And then basically that's only the start of when the bell sound, when the trade first came out from the market on Friday. That's the price it reached, and it's just quickly gone back up again. So basically there's a lot of gaps happening because due to missed earnings, others due to above earnings. And basically they reflect one of the core thing about trading, something that we just could not control of, which is earnings. Sometimes it may beat the market, sometimes it's below the market, and obviously the price do its stuff, and then gap jump up and down, and this hurts a lot of accounts. I mean, when I was beginning trading, it hurts me a lot. And what basically happened is, if you take a long-term view, these gaps up and down, it happens every time when there's, in America, basically in share trading in general, in indexes, every quarter you have shares come out with their trading results, and then that sort of moves the index and stuff a bit as well. And we see that very clearly this time. So I think what people need to learn from all these gaps is how to handle the gaps. Is don't think short term, because the gaps sometimes happens against you, sometimes happens for you. Basically, you just don't know. It's more like a 50-50 flipping the coin. But providing you continue to follow your system, which hopefully have a positive edge, then you should make money over long term. And trend following system definitely make money. However, in short term, sometimes you get hit quite badly by basically gaps. And the other thing I want to highlight is Tesla. Everybody think it was not going to make its numbers. There are a lot of doubts before the result actually came out on Thursday, and I think on Wednesday night. Last Wednesday night. What happens there was, if you look at the price charts, it actually was above the 50 days in 200 moving average for earlier in the week already. And I think last week it's been doing that. And then it just failed to go below the 50 days moving average, And it basically, that tells you the price, below the 200 days moving average, because it's coming back up from underneath, from below. What happens there is, it failed to break below, to close below the 200 days moving average. I think only one day or something, but then the next day bounce back. And that basically, this little dip on the 200-day moving average line, or just below it for a day or two, and it's just quickly come back up again, it's a good charting signal, a signal that the price got good support and is poised to move back up. And I've seen this time and time again. And this time it just boils out by having a trading result that beat the market consensus by quite a long way. And then the share just basically, I think it was 260, 270 marks. And then the next day it was opening to $300. And then I think Friday it went up another $12 or something. So it's quite amazing, right? And I wasn't surprised at all. I was actually watching it for a couple of weeks, and I was basically saying definitely it's going up. And unfortunately, it's not a part of this sample portfolio, but it's in my portfolio, and I make a little bit of money of it through spread betting. But basically, when you come back and look at this price chart and look at the shares, and what have happened is the short term, the price will go above short term system, the 2ATR system, for about 3 weeks, 4 weeks already. So slowly coming back up from the bottom, broken the 50 days moving average from below, and then broken the 200 moving average last week, and then stay above that. So it's a very good term. It's short terms and long term hasn't actually produced anything until this week, end of this week. So I think Tesla has got legs, and so long as stay above the 200 days moving average, which now is like 270 area. That's like a lot of gaps. There's a big gap. I think it's $50 or $40 gap from the price now to 200-day moving average price level. So if you really interested in Tesla, want to get in, I would suggest wait until it's twice pullback or touch or very close to 200-day moving average before you go in, because the price will move up too much. However, trend following, we don't really care. Trend following, we say, okay, if we go above a certain value, we buy. We will buy higher still. So if you're a true trend following follower, forget about chart and stuff, just look at trend following. You should basically go in as a long term, as a system 2, using the turtle ways of trading. Basically go in, buy one lot, just your initial whatever one set of shares you want to buy first, and then when the price move up again, then you buy some more. But this Tesla definitely got legs. And the other thing I want to add is over the week, of course, there's talks about the Brexit and the votes and all sorts of things going on. But the price of the British pounds against the Japanese yen and against the US dollars, again, you see something very similar. I think it's probably brewing. It's happening to Tesla. Because of initial talks of getting a deal from the European Union, agreed on a Brexit deal. The British pound's gone quite strong the last week or two, and gone above the 50 days moving average and the 200-day moving average as well. And I think the pounds against the dollars went US dollars went to about $1.30, and the Japanese yen against Japan is about 140 or 142, 143. But now it's come back down again because obviously there's this disagreement between the Labourers and the Conservatives. So they're having a basically internal fight. Now we're looking at possible general election in UK. So there's a bit of uncertainty there. But however, I don't think we're ever going to see below 120 for foreseeable future, because 120 is when I think when Boris Johnson became the Prime Minister, when Theresa May gave in. Basically, I think that was the low of the pounds. And then obviously any good news, like getting a okay from Europe for the Brexit deal, is a positive, and you see the British pound quickly jump back up again. Obviously now it's a bit of coming back down, at least down a bit, but I think it will do if it stays above the 200 days moving average on both British pound against the yen or against the US dollars. Then it might do something similar to Tesla, as far as I'm concerned. Especially if there's any whatever the Brexit deal between the government and the Labour, if they can sort something out, the price, I think British pound will definitely break above the $1.30 max. But however, it's still early days yet. But from the from the short-term trend following system, have a look. We basically, I think it's best to add pounds against the yen and pounds against the US dollar into this sample portfolio of mine. I think simply because I think it's very strong at the moment, and it's definitely useful to include it. And I think from as far as my analysis is concerned, all the short term, medium term, and long term are all moving up. And so I think it's definitely there is legs on this one. So watch out, and this could well make you quite a bit of money if you keep track of it. And so that is what I've been doing the last week basically. But the other odd thing I also found out is the McDonald's in US. Okay, it seems to be like I don't know, it just personally looks like a personal, to me, it's like a leading indicator of how the market in general is doing. It always moves up before the main market goes. But obviously in McDonald's, around the world, it's very popular in US, and is making quite a bit of money. But then recently, I think the last couple of sessions, it's gone below the 50 days and 200 days moving average. Basically, it's going into sell mode. And I think this sort of may as well be a leading indicator. So I just want to bring this up to, ask you guys to tell you guys to watch out, have a look at McDonald's. And I think there might be some hint of the index in US is leveling out, maybe slowly coming down. But we'll see how it goes. So McDonald's, as far as concerned, the short term and medium term and long term as well, I think they're all going down at the moment. So McDonald's is another good shot, but it's not in the sample portfolio, but it's in my portfolio. So I just sort of found this during the Friday. And basically, I think on Monday I will go short it a little bit more. But just to let you know, so you can get in earlier. Unfortunately, sorry for be delayed for this week's update, because obviously life happens and it's very busy. Also, I'm a bit sick, that's why you can hear my voice not very clear. But hopefully next week all clear up. And hope you found this interesting and useful. And please subscribe to my podcast and listen to the rest of my podcasts. And we'll speak to you next week. Bye.